Good evening. Welcome to Markets Today. I'm Lata Venkatesh. With me is Surabhi Upadhyay. Well, the markets did end with a little bit of green today, primarily because we got some positive cues from Europe. Greece is working hard on a set of reform proposals. Chances are, or at least hopes are, that it would be accepted over the weekend, and that had a salutary impact on the Indian markets, at least towards close of trade. Hi, Surabhi.
Hi, Lata. Yes, so finally a good way to cap the week. Let's start with the headlines. A choppy day of trade on Dalal Street, but one that finally ends positive. A late rally lifts benchmark indices up by almost 0.4%. The Nifty closes above 8350. Banks, pharma and capital goods stocks see some good buying.
Big stocks on the move. TCS ends down 2% on its first quarter earnings disappointment. Bharti and Idea lose 2 to 3% after we reported that the companies may need the TRAI's approval before launching new tariff plans. Vedanta and Kane rally on expectation that LIC may give its view on the merger over the weekend.
The mid-cap index underperforms blue chips, closing almost unchanged. Noida toll bridge falls 14% as toll collection stops on the DND flyway due to farmer protests. Monat Ispat rallies 20% as the company looks to sell a controlling stake in its subsidiary Monat Power. High flyers Subex, Archies and MIC Electronics finally see some profit booking after their recent hard run-up.
Those were some of the headlines that dominated market mind space, and now a quick look at some of the big voices that we have lined up for you on the show. Prabodh Agarwal of IIFL tells us why one should look at buying every dip right now, while Temasek's Ravi Lamba says he is looking to double his investments in India. And we also have N. Chandrasekharan of TCS on the tech major's digital drive, and Tata Motors' defense head Vernon Arona on the company's 1,200 crore defense order win.
But first, to all the market action of the day. It's been a day of consolidation on the Dalal Street. Markets were choppy, but they moved in a narrow band, finally ending with minor gains. Anuj Singhal is now joining in with a wrap of all the details. Anuj, what do you make of the day?
Well, a day of consolidation. It was quite choppy. At the end of the day, both the bulls and the bears could claim victory. From the bears' point of view, the market was seeing every rally being sold into, and it could just not go towards that 8400 mark, despite opening somewhere near there. And from the bulls' point of view, the bank stocks saw quite a bit of outperformance, and despite TCS's lack of show today in terms of supporting the market actually ended in the green. So that's where the bulls would feel that really they had a good day. Let's talk about some of the stocks then. Banks clearly leading the bulls today, especially the private sector ones. Stocks like HDFC Bank, ICICI Bank, Yes Bank, all up between 1 to 1.5%. So that really was a sector that was doing quite well. Some other nifty gainers included both Vedanta and Ken. Both of them were up quite a bit. Vedanta, in fact, was up 5%. And Sun Pharma, big bounce back for that one, 3.5% higher on that. Apart from that, the support for the market came from three heavyweights, Larsen & Toubro and Reliance, which in any case have been strong stocks, and Tata Motors, which bounced back after a massive derating. That stock was up about 1%. On the losing side, of course, TCS was the top contributor. That stock was down about 2%. Bharti Airtel, Idea as well. Telecom stocks were down today on profit booking, and Hindustan Unilever also down on profit booking, down about 2.5%. On to the mid caps then. There were some big gainers today, stocks like On Mobile, Bhushan Steel, Z Media. In fact, On Mobile's last closing rate was actually a 20% upper circuit. On the losing side, though, we had some big names as well. Archies, which has been gaining ground, was one of the stocks of the week, actually lost about 10% on Friday. Subex was down 5%. And Noida Toll Bridge, where there is some problem regarding collection of toll, that stock was down about 14%. So that really is the day and the week. It was a relatively bad week for the market. Next week is going to be crucial because we'll have pickup of earnings season and we'll have some more clarity on the Greece picture as well.
Yep, thanks a lot for that, Anuj. Just a word more on the bank stocks. Besides the private sector banks, actually today we saw the public sector banks neck and neck actually pull up the PSU Bank Index. That's up 1.18%, a tad higher than the bank Nifty, which is largely private sector bank dominated. And of course, both of them are head and shoulders above the Nifty, which is up just 0.4 or 0.38 to be precise. What's working for the public sector banks at this point in time is that there are two trends one can see. One is this not fast, but steady sell-off of core assets and non-core assets by companies which are beleaguered by debt. The latest example being Monet Ispat, selling off the power division to JSW Energy. Well, the deal is not through, but this is indicative of the banks probably finding some buyer for their weak assets. Electro steel could also be another example in this. And then there are the other examples, the weak ones who are getting that extend and pretend extensions of their loans. Loan refinanced, 8-year loan becoming a 21-year loan. Hopefully, therefore, at least as far as the bank balance sheets are concerned, their P&Ls are concerned, the NPLs are postponed or even outright getting reduced because some of the weak companies are taking over by strong hands. Likewise, like the banks, you also therefore witnessed some of the infra companies doing well today, like a GVK Power or JSPL, all on the hope that some kind of non-core sales and even core asset sale is probably taking ground now. There was also the one-odd mid-cap stocks like say Aman Industries, Eros International, Sterlite Technologies, each of them some macro or micro news. So a bunch of mid-caps were also up and about on individual news related to those stocks.
Okay, so that was today's market action. Now let's move on to the big market voice of the day. Prabodh Agrawal of IIFL does not rule out the possibility of a further correction in the short term, but he's also quite confident that domestic institutions will look to buy into every dip from here on. He's also someone who believes that an improvement in corporate earnings is just around the corner.
If you look at tactically, then it is possible that the market could weaken in the near term. That depends upon many technical factors as well. For example, FI selling. Market could fall more depending upon how many of these extraneous factors turn out to be, or if there is a bunching of negative news on the domestic front, the market could fall. But then I would think that the bounce back could be equally sharp. So it's instead of looking at at a floor price, if the market falls, for example, by 8-10%, the bounce back would be very sharp. It is unlikely to sustain at that level for very long. Already we are seeing some buying interest. And one thing which I must point out here is that the very positive thing, in the entire, last 3 or 4 months of correction has been consistent buying by the domestics. I really believe that the valuations are not expensive after the 10% odd correction that we have seen. The market trades at about 16 times 1 year forward, which is slightly above the long-term average of 14.5. For people who are inclined to look at more historical numbers, on a trailing basis, the Nifty trades at about 19 times, which is slightly again above the long-term average of 18 times. Again, not too expensive. So it's a matter of time before the earnings growth pick up, and then in hindsight, the valuations will look much more reasonable. Earnings, last year was probably the worst year in the last 10 years for corporate earnings. Net profit growth was hit a decadal low. Revenue growth hit a decadal low. Even the EBITDA and the PAT margins were at a significantly lower level last year. But starting first quarter, we expect improvements to start. For a few sectors, the earnings growth may be more back-ended. For example, cement or industrials or telecom or two-wheeler. So again, I would think that it is not right to say that the entire earnings growth will be back-ended.
Okay, so that was one important opinion on the markets. But let's come to specific stocks. It's definitely a breather for Sun TV and the Modern Brothers, and the market did cheer the fact as well that the Enforcement Directorate has informed the Supreme Court that it will not take any coercive action against the Chennai-based company till the next hearing of the July 13th. This after Sun TV moved the Apex Court seeking a stay against the Enforcement Directorate's order attaching its properties in the Aircel Maxis case. Ashmit Kumar, our correspondent who has been covering this case, is here with all the details. Ashmit, it's a temporary relief, you would say, but are there any riders we should know?
So, of course, as you pointed out, an interim relief coming in, the rider being that more clarity. This is relief which is going to last only till Monday, and that's when Sun TV will also be seeking more clarity on the road ahead. But just to give the sum and substance to our viewers, just a brief background. The Enforcement Directorate has been probing the SL Maxis case, in fact, alleged that illegal gains, illegal gratification to the extent of 750 crores had been pocketed by the Marlin brothers, and towards that end had passed a draft order for attaching assets of Sun TV, which, as per Sun TV's claims, those assets are worth a lot more than 1,000 crores. So those are the figures that we're working with. Sun TV consequently had moved the apex court, and this is where they got the first stumbling block. The bench today before the apex court held in very clear terms that this is not the 2G bench, and that this, given that prima facie is a 2G case, can be heard only by the 2G bench of the Supreme Court, which is headed by the Chief Justice of India. But then arose the question of the ED's actions. The Sun TV had appealed, had in fact argued before the apex court that they were worried that ED is likely to file its final order with respect to attachment by later today. However, that did not happen. The ED, after being prodded by the Supreme Court, has now submitted before the apex court that no coercive action with respect to attachment will take place.
Okay.
The ED also submitted that proceedings are currently underway, so there was no question of filing a final order. So relief definitely coming in at least until Monday, when we can expect more clarity.
Moving on, in China, shares continue to rebound. The benchmark Shanghai Composite Index ended 4.5% higher. A slew of measures by China's central bank and market regulator appear to have worked, at least for now. Analysts say the sell-off has brought the valuations of some Chinese stocks to levels where investors have reason to buy. The two-day rally brings good cheer, but the Shanghai Composite is still off 24.9% from its June highs. Well, CNBC's Adam Bakhtiar joins in now. Adam, what a comeback by the Chinese stock markets?
We continue to see strong gains in the Chinese markets on Friday's trading session, boosted by the ongoing raft of measures by the authorities in Beijing to put a floor on the stock market rout, which at one stage has wiped out almost $4 trillion in market capitalization over the last 3 weeks. Take a look at the gains in the Shanghai Composite, 4.5%, and it was a broad-based rally across all of these equity markets as 60 more stocks came back to trade today. Remember, though, 1,300 are still suspended. But looking at the gainers and losers in the markets, there were only 6 stocks that ended the day in negative territory on the Shanghai Composite. In the meantime, we got fresh economic data that shows that perhaps the rout in the stock market is beginning to affect the world's #2 economy. Vehicle sales in China dropped for the first time in more than 2 years, falling 3.4% in the month of June. The last time we saw declines of that size dated all the way back to September 2012. Despite that, though, we did see, of course, automakers continue to rise in domestic trade following, of course, deep sell-off for the last 3 weeks and ongoing support for the broader equity markets. However, the litmus test will come next week as the world's #2 economy reports a raft of economic data, including Q2 GDP, fixed asset investment, industrial production, and retail sales. And the markets will be focused on that very closely.
Right, yes, of course. We'll be focused both on the GDP data and on the stock market performance from China, of course. Well, fundamentals in India are strong and the country will not be hit by volatility from Greece or China in the medium to long term. That's the word we got from Singapore-based PE giant Temasek. And in what's a clear example of the firm's bullishness on India, Temasek has invested a whopping $1 billion, the largest private equity investment till date in a single quarter. Kritika Saxena caught up with the co-head of India, Middle East and Africa, head of Temasek. Here's a slice of the conversation.
The China volatility again, I mean, is something that we're seeing rebounding again, right? There was a lot of, yesterday the market recovered. But again, we feel that volatility and that market sort of movement is unlikely to have much of an impact on India either. The spill-on effect isn't that much. Okay. As we look at it, because the people look at India for India growth, right? People look at India for India investment returns, right? And unless there's a huge issue around the world which affects sell-off in all markets, then India will get affected.
Last fiscal, you mean FY15, you invested about $1 billion?
Yes.
As a whole, so for FY16, you're already at...
We're already at $1 billion, yes.
At $1 billion.
Yes.
So would you be able to double that by the end of the fiscal?
Well, we certainly hope we can find more opportunities because we believe in the long-term growth in India. We are optimistic about what we can do here over the long term.
Okay, that's Temasek. Now, the country's largest commercial vehicles manufacturer, Tata Motors, has just bagged a 1,200 crore rupee order from the defense sector. CNBC TV 18's Alexander Matthew caught up with Vernon Norona, VCN head defense business at Tata Motors, and began by asking him about the big order win and the company's plans for the defense sector.
6x6 has been a big boost from the Make in India program because it's a large order, even from a land systems point of view. Next, after the 6x6 is the light specialist vehicle for which an RFI has been issued. Light specialist vehicle, the potential is 1,300 vehicles into probably 1 crore each. And after that is the light armored multi-role vehicle, which is for 700 units. That potential revenue is about 2,200 crores. So as you see, things are beginning to move. And along with this is the UN Peacekeeping Force 100 numbers infantry combat vehicle.
Okay, we're looking at, of course, the IIP numbers. That's again something the market has to react to on Monday. Lata, what do you make of the data?
Overall output number is definitely below street expectations, but there are flashes of good performance. Electricity has come in at 6%, largely in line with expectations. Mining is almost 3%, 2.8%. So clearly some mines have been restarted. And more importantly, basic goods, which largely comprises items like coal and which have a big weight in the IIP, have done well at 6.4%. So some parts are ticking well. It's capital goods and consumer goods that have let down badly, and that's why the overall manufacturing is 2.2%. But within that, capital goods did well for the last 3 or 4 months. These are lumpy items and do tend to flag. The output tends to be a little volatile. So perhaps one should not read too much. Maybe in a month or two, we could see capital goods coming back. And if you looked at the average of the capital good performance for the 2 months, April and May, then it doesn't look too bad. It's 4.4%. It is only when you look at May in isolation that it's a poor 1.8%. But clearly the weak element is the consumer items. Consumption is weak. Overall minus 1.6. Consumer durables is minus 3.9, and consumer non-durables genuinely weak at minus 0.1. Consumer durables has a big base effect, but otherwise it is still a weak number. So there are reasons to be disappointed with this number, but perhaps this is just one of the bad numbers. We have to look at it in a quarterly fashion.
For now, a quick break. Coming up on the other side, TCS ends down on earnings disappointment. The company is still optimistic, especially on the digital space.